You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 7th of May, 2018. Everything is up for the day on this glorious Friday. We always jump into the S&P 500 as represented by SPY, the exchange traded fund first. What do we see going on this week? Well, we see a spinning top. A red spinning top means indecision, not as much indecision as the prior week, but indecision tending down. Now, of course, we have been in a confirmed down move in the market since the big drop where everything was shaken up in the market back on the week ending the 9th of February. Then the market tracked sideways and sort of peaked out in mid-March, and since then, down for 3 weeks, ending the week ending the 6th of April, and then sideways pretty much since then. And what we've seen for the last 2 weeks, indecision tending down, derivative oscillator still losing downward momentum, price percent oscillator still headed down, not super strongly, but again, all things being equal, the market always tends to move in the direction of the largest chart. That is the weekly. As we look at the 2-day chart, we can see that it's sort of bounced off the red signal line over the last couple of days, and we see again that we ended the week though with a red spinning top. We do see the price percent oscillator is headed up, derivative oscillator losing upward momentum. So again, haven't had a crossover on that, so we don't have a trade yet. Weekly's down, 2-day is up. But if we start the week with some down moves, we may have the ability to jump in to a move, but not at the moment. So we will keep our eye on things. Here's something to pay attention to. If you look at that 4-hour chart, it crossed over at the end of the day pretty strongly going up. If the week starts off and weekly and starts moving over going down, watch to see if the 4-hour and the 2-day cross going down at the same time. If they do, then of course you might have the ability to jump into a down trade. Just watch. If the legs get knocked out of the market early on, that might offer you an opportunity. However, we do see on that 4-hour chart a penetration of the 50-period moving average line on our charts. It's a gray line. The 200 period is a purple line, but we have passed through that. So again, something to watch. Typically, when you have the price percent oscillator and derivative oscillator change directions at the same time, that's a stronger move than your typical one where one crosses before the other or after. That is a situation, again, where not always so strong, but we may see more of a continuation at the opening of the market on Monday going up in that same direction. But just keep your eye on it. If you see things cross over hard going down, you might look for a jumping in point for a down move since that weekly is already in a confirmed down move and the 2-day is a little weak. So keep your eye on that. That's where we are as we end the week on the S&P 500. For the day on Friday, up 1.29%. The Q's up strongly on Friday for the day, up 1.90%. That ended up showing us for the week a green spinning top. Now again, indecision, not as much indecision as the prior doji, but indecision tending up. We see the price percent oscillator headed up, hasn't crossed over going up yet, still in a confirmed down move, but it's penetrated, price at least, on our candlesticks has penetrated the weekly trend line. Derivative oscillator losing downward momentum. Now as we look at the 2-day chart, what do we see? Well, of course, it was laminated for a while, just laying right there on the red signal line. It has since bounced off that. And it again is a green spinning top, means indecision tending up, pass through, of course, the weekly trend line. Derivative oscillator gaining upward momentum, price percent oscillator shooting up. As we look at the 4-hour chart, what we see there is bouncing off the red signal line there in the afternoon on Thursday the 3rd, and then strong up movement in the morning and afternoon. So again, keep our eye on things and just see what we see. Again, a little bit of schizophrenia there. We see on the weekly chart that it is headed down, and of course on that 2-day chart, it is bouncing off, and we said yesterday we would be changing that if the mood swung over and that uptick continued, which it has, and we will mark it now that we have things moving in the opposite directions. 2-day up, weekly down. We'll watch when we do have a trade on the cues in the future. We will let you know. Don't have one right now. We'll see how this market shakes out as the week goes on. What do we see going on TLT? Well, second week, we've been waiting for some movement, hopefully for bonds to cross over going down. Appeared to be where it was going to happen. We thought that would actually happen the week ending the 27th, last Friday. Well, this Friday did not happen either. Looked like it would. It did during the week, but then it pulled back. We had an up move 0.15% on Friday. We now have a green spinning top, means indecision tending up. Now remember, we're getting into the summer doldrums. Sell in May and go away. I keep saying that. Live to trade another day. So much of the volume starts leaving the market as people go on vacation, and just summertime typically is not a big time of trading in the market. It's that fall-winter trading zone where we have good, strong trends, and we don't have all the volatility typically made by lesser volume in the market. So that means smaller things move more stuff, smaller movements, smaller waves. We see the derivative oscillators losing momentum, still positive, and the price percent oscillator still barely positive. So we'll just continue to watch things. So we're technically still in a weekly up move. We look at the 2-day chart. What do we see there? Well, it crossed over going down back on the 20th. Does appear that the price percent oscillator is headed up, might have a crossover going up. Derivative oscillators losing downward momentum. Latest candle we have is a green open box candle. Little bit of a wick on the bottom, not much. Big wick on top. What do we see on the 4-hour chart? Again, we have 3 spinning tops in a row on Thursday afternoon, then Friday morning and Friday afternoon. We do see that the price percent oscillators heading up, derivative oscillators gaining some upward momentum. So we'll just continue to watch and see. Again, when we have the weekly going in one direction, the 2-day going in an opposite direction, we don't have a move until they correspondingly are moving in the same direction. We do not have a play until that happens. So we'll keep our powder dry and see what we see. Remember, we are not forecasters, we are trend followers. Lastly, we go to gold, up 0.22% for the day. Ended the week with a strong down candle, the second down candle in a row. Derivative oscillator gained downward momentum. Price percent oscillator also headed down in gold. As we look at the 2-day chart in gold, we see that things sort of leveled off. We had 4 strong down candles, and of course, this latest down candle that we had in gold is the latest candle we had in gold is a green spinning top, long wick on the bottom, not as long a wick on the top. So again, a lot of price struggle. The price percent oscillator, as we can see, is gaining downward momentum. And yes, well, it's still headed down. The derivative oscillator is the one that's gaining downward momentum, getting longer. Price percent oscillator not headed down with the same amount of strength with that bit of a pullback that we saw over the last 2 days. We look at the 4-hour chart. What do we see? Well, it crossed over going up in the morning. And as far as the price percent oscillator went, derivative oscillator headed up, even gained more energy in the afternoon. Again, price movement still below the 2-day down trend line. So again, on gold, we would like to see this 4-hour chart. It really worked beautifully starting on the 19th as a nice trading chart going down. We'll continue to keep our eye on things. If gold keeps following the pattern, we may have our total trading chart back on that 4-hour chart. It worked for us for a good 18 months or more. Almost all the time when we saw that 4-hour chart move in one direction or another, you could bank on it. And of course, we did a lot of practice trades on gold with that 4-hour chart. Maybe it's happening again, my friends. I hope that it does. In the meantime, realize that your weekly chart is in a confirmed down move. Your 2-day chart is currently in a confirmed down move. And if we have a rotation over, we have a pullback underway right now heading down, might give us an opportunity to actually jump into and ride gold down on an inverse play. We'll just continue to keep our eye on the prize, see how things go. You have questions, problems, concerns, we'd love to hear from you. If you haven't already pre-ordered our book, please do so. You can find links to how to order it in the email that those of you who subscribe receive. You can also find it chartingwealth.com at our website and also at our YouTube channel. We have instructions on both under the show notes. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.